from that introduction, well, yeah, I'm a grandfather, and I've got a few grey hairs, as you can see from the mugshot. Been around for a while, and well, a good many years in this in this crazy business. That I've seen so many things come and go, and very interesting comments that Alex and Simon was making, and you as well, Simon, regarding leverage, which of course is the thing that's set the cat among the pigeons in the industry, and what was really indicative of what has been going on. I won't mention them by name, but the two largest spread betting companies, their share prices were decimated as soon as the announcement came out that there was going to be an investigation and, of course, recommendations. And it's a long time coming. So there we are. That's something which is going to link us now with 50 to 1 leverage on all sorts of things, and it's been in the States for years. It's been in the States for years, and why on earth our regulators haven't wised up and just realised what has been going on? Because it has been it's been the Wild West with the lack of regulation. Anyway, that's a completely and utterly different story. Now, I was looking at the presentation that I was starting to put together earlier in the week, and I thought, well, all of this stuff really is related so much to the presentation that I did at the Round the Clock Trader Live, and I thought, no, let's just go and look back and review some of this stuff. So I'm going to split this into two parts effectively. We're going to just run through some of these key things that are going on at the moment, and probably digress a wee bit along the way. But then we're going to come right the way back, specifically looking at charts, and I want to give you an insight into the way in which my trading has evolved, if you like, which also sort of fits in with changes in my own lifestyle that I've sort of undergone over the years. So let's just move into this a minute. As a good many of you know, I've been around for a while. The breakfast trader, which is still going strong, harmonic wave trader, extreme trader, and the extreme swing trader, which it's my primary money making process right now. Oh yeah, Traders Class website. Got two websites, tradersclass.net and clickevents.co.uk, where you can find out more about me. Now, this was one of the key issues last year. It was this unsustainable Western world debt. And we've had this cacophony of commentators telling us that the amount of debt in the Western world, largely taken on using the excuse of the 2007-8 crash, where we just had to make sure that banks were not going to collapse, then that was the excuse for pumping an awful lot of money into the system. And we've looked at these incredible numbers, 125% debt to GDP ratios, etc. We've seen what happened to Greece with an unsustainable amount of debt, Portugal, etc. And the latest thing, which fizzled out, or so far has just been sort of glossed over quite neatly, is the Italian banking crisis. So we get Trump, and Trump has created the impression so far that he is going to be the great savior of America with its protectionism, etc., and he's going to really get the economy going. Well, to get an economy going, you've got to have money. You've got to have more debt. You've got to have things which will mean that companies can become more profitable, etc. And, of course, this 23 trillion of debt is entirely likely to become a lot more, 25, 26, 30 trillion, etc. during his term. So is debt the problem that we all think it might be? Question. Just want to throw that one out there. So, this was the key issue back then. Was it going to be Trump? Was it going to be Hillary? And on the one hand, we have the seasoned politician who speaks as a politician, and then, of course, we've got Trump, who, rather like Farage, love them or hate them, just talk plain language, plain pub language, and that's what people seem to really love. But let's just get real, that if we look back historically, then just doing a little bit of research and going back over all of the last two-term presidents, there haven't been all that many of them, but those that have managed to put in two terms, following their reign, what has happened? Economic collapse and recessions. And so Trump could well be the kicking boy if and when we get a recession in 2017, or at least 2018 maybe. And he's going to be labelled as the man who brought the recession if he is not very lucky and very, very careful indeed. And we're going to look at the stock market, some of the charts, which are not looking very pretty at the moment. This is how it was back then. Look at that. Look at the dates. That was the beginning of November, and we've got the markets absolutely going berserk, and they went even more berserk. So what about the dollar? You know, the dollar had been rising, and it had another run up. What about the bond bubble? Well, what is really quite interesting is that, yeah, you know, we've got interest rates rising, and with interest rates rising, then what happens to bonds? They go the opposite way. They go down. It's a sort of a lockstep relationship between the two. And this has been getting a good many commentators very, very hot under the collar. And of course, we've had Janet Yellen yelling at us, telling us that, yeah, interest rates are going to have to go up again. They have to go up again probably several times in 2017. And if we just look at the reality around the world, things like inflation are ticking up. They certainly are here in the UK, as figures came out this week. Inflation prospects are ticking up. There were some numbers coming out of Australia overnight, just last night. And those numbers are telling us that inflationary expectations are rising. So what happens when there are, you know, expectations of inflation? Well, interest rates start to go up. Interest rates start to go up, bonds go down. And, you know, if we find that there is going to be, you know, something of a spiral of inflationary demands and expectations following through into reality, then interest rates will go up. What's going to happen to bonds? Well, look out. Absolutely look out. So this one is still a key issue, and it's still there. And then what about China? Again, a little bit of news out overnight was telling us that China have had to put an awful lot of liquidity into their banking system. And just over January so far, they have pumped a lot of money into their economy. Again, is it a problem? Is it not a problem? Is it containable? Is it not? Well, debt is it's rather like our own personal debt. You know, we can take on whacking amounts of debt personally, which is not a problem provided we've got the income to cover the interest rates and the repayments. But as soon as we haven't got that income, or the cost of that debt goes up beyond the ability to cover those interest payments, then we got a problem. And it's just the same with the likes of China. So the big question is, why has China not collapsed yet? Why is its economy still managing to bumble along, even though the amount of debt in the system gets greater and greater and greater? Well, it remains to be seen whether early 2017 is going to mean that Trump is going to put a lot of tariff on Chinese goods and if it's going to cause them a problem. The tariffs already on steel are massive in the States. They're massive. And China still manages to keep on going. So maybe, just maybe, China is not going to be the problem that everyone has been talking about for the last 5 or 6 years. So, keep calm, folks, and carry on, because whenever things look absolutely dreadful out there, it's because it's known news, okay? Known news. It's when we've got news, we know about it, and the market adjusts to it. It's what we don't know. It's those known unknowns and the unknown unknowns. That American politician who was talking about this way back. So, there are various things that we just need to do and ignore all of those talking heads. Financial journalists, they're no better than you or I. And we've then got to keep a real close eye on under trading and not over trading. Coming back to the leverage, 400 to 1, etc. you can get, well, great, yes, you can manage a highly leveraged trade, but you're going to be on eggshells. And consequently, every little twist and turn is going to be hitting the emotions, and the chances are we're going to get out of some real good trades when we should just be widening our stops and sticking around and waiting for it to really get moving. So, under trader, and just don't get carried away, has got to be probably quite a reasonable mantra for us to live by. Oh yeah, of course, this one is going to be killed off. So many companies are offering, a 20% addition to whatever money. You put your 10 grand in, and they said, oh yeah, we'll make that up to 12 or 13 or even more. I've seen 50% increases. And you look at the small print, and the only way that you'll actually get that money back in cash is you've got to overtrade. You've got to trade like crazy. They're not going to give you free money for nothing. And finally, never let a profit become a loss. Dead easy to say that one. We've all done it. We've all had a whacking paper profit and end up taking a stop loss. It's happened to us all. But by being very, very careful, being very, very tight on our trade management, then we can reduce that situation and get very, very close to never, ever taking a loss from something that was previously in profit. So there we go, folks. That's that's the sermon of the day, if you like. Yeah, there will be an offer. There will be an offer, which I'll put to you much later on. But let's now just get down to looking at the basics of swing trading, because swing trading is where I'm at. I still do some intraday trading, but what I do not want is to just sit in my little office in front of the screens all day long waiting for something to happen. So now with swing trading, I'm much more relaxed. I take time off, I take days off. In the good weather, I go out and have fun. In the not so good weather, well, I tend to read a lot of books. But what I don't do is to sit at screens. And this is where this whole process of extreme swing trading has actually transformed a lot of the things that I do in the markets. And it's basic stuff. What we're looking at here is how to define a trend. Well, a trend, you can look at a screen and you can spot a trend. You can spot a trend, or not, as the case may be. Price just might be going sideways. We need a trend to make money. So if it is going sideways and is just in the trading range, stay out. Simple. Don't trade until we've got the trend telling us what it's going to do. Now, there are indicators that can be added, and there's a little indicator here at at the bottom of the page. And when we get onto the real charts in a moment, then we'll see this in action and how useful it is. So what is a trend? Higher highs, higher lows going up, lower lows, lower highs going down. You do not need the myriad of indicators that there are out there that try to tell you what the trend is doing. Now, we can see that over on the left-hand side here, we've got the USD against the Japanese yen moving on up. It's a very clear higher high, higher low uptrend. Simple as that. It then drops into sideways mode for a little while, and then it starts to drop on down. And what do we find is that, well, this activity index that I use, which I've had adapted, is just telling us that when it's above the zero line, we are predominantly in an uptrend, and when it's below the zero line, we are predominantly in a downtrend. Now, you don't need that indicator. You can just eyeball it, because we can now see that it's switched into lower lows, lower highs. We can actually see that. And we've got an additional little indicator here. It's a very simple one. It's just based on the average true range. And it's our sort of momentum. It tells us what the momentum is doing. When it's blue, we've got the momentum going up. When it's red, we've got the momentum to the downside. So, two basic indicators. And we just add it to some pretty common or garden stuff. For instance, some basic candle analysis. Don't want to get too carried away, but as long as we can identify what a hammer is, a hammer day, we get this price then starting to move on up. The activity index goes above the zero line, and well, we can see quite obviously it's going up, so we want to get in on the trend, so we buy it. We keep buying it until we get a pretty strong indication that for the moment it ain't going to go up anymore. And just by observing the candles, we can see that we've got a bearish candle. It's one of these engulfing candles, and it's telling us that, look, there are some sellers out there, and the activity index turns red, tells us that, look out, we just might want to take some of our profits, making sure that we never let a profit become a loss, and so we take the best out of the move. We then just mark time a little bit, and lo and behold, standard little triangle, and we're off again. Activity index turns blue. Notice it is still above the zero line, so we can still stay with the uptrend. It runs on a little bit more, da-di-da-di-da, well, quite a bit more in actual fact, and then X marks the spot. Look at that. That, in this trend, I've just following it on up, the higher lows, that's the last higher low. That black line represents the last higher low. And when it gets broken, the chances are the trend is changing. We've got some candles which are confirming it, and sure enough, look at that, the activity index then pops down to the zero line, and the trend is ready to change. So, I do not want to get involved in anything that's overly complicated. You won't believe some of my old charts. Way back before we were into computer trading, then I would get my charts sent through in the post, update them every single day, and I had lines absolutely everywhere. Absolutely everywhere. I had all sorts of indicators that I put on and had devised and da-di-da-di-da. It was a complete and utter mess. And it also led to sort of scrambled egg thinking. There was no clarity. This is clarity. So we got the swing trend, helps define the trend, and confirms the activity index that we've got down here. So, there are times when price goes sideways. Well, if we've done jolly nicely out of a profitable move going higher, it will then drop into a sideways mode. And what we've got to do, we've got to be prepared to do nothing for a while. And you know, that is one of the most difficult things for traders to do, or not to do, is to do nothing. It's just to wait. It's just to wait until things have really settled right down. And eventually we get it. This black line is just like the previous black line. It picks out the last high low, price breaks down through it, and sure enough, we've got the activity index, which has been pointing down. It's below the zero line. What are we going to do? We're going to sell it. And we just sell it until this little trend hits the bend at the end and comes to an end. Now, I don't just trade currencies. I trade the indices, gold, silver, and oil. Now, what we do find is that the currencies have been absolutely amazing over the last couple of years. And I believe they will continue to be so for quite some period of time. But the indexes do really come into their own. Yeah, you know, you can intraday trade these, but you can also trade them over the longer term. The stock market has been something of a one-way bet, possibly up until now. We'll look at those charts in just a moment live, but what about gold? Well, yeah, trade gold. We get some amazing runs. And these just follow these standard trend following rules, where we can just eyeball a couple of indicators, look at price action, and get on these moves. Some of these run and run and run and run like crazy. Others, you know, there are times when we don't get it right. You know, we think we might be off to the races over here. And, you know, that was September, but it drops into sideways mode. So our money management kicks in, and we will then just stand aside until it tells us what it's going to be doing. And price action is the final little link. We've got one or two rules. I say we've got one or two rules. We've got quite a few rules that really have to be followed. And provided we can stick to those rules and be patient and not get greedy, we can do really quite nicely. And the euro, it's been a particularly good runner. We'll look at it right now, and we're in something of an uncertainty phase. New Zealand dollar, an amazing runner. Superb trends. New Zealand dollar against the Canadian dollar. Again, amazing trends. Some of these crosses, as we call them, New Zealand dollar against the Canadian dollar, etc., pound against the New Zealand, euro against the New Zealand, etc., will give us a much, much bigger move. We get a double effect. We get the effect of the New Zealand dollar and also the Canadian dollar, and the two together mean that some of these runs can be really very, very large indeed. And you know, there are times when we want to add in one or two other indicators as well, and Fibonacci is something that I've used for a very, very good many years. We're going to look at this chart live in a moment, and you know, just picking out some of these important levels, some of these levels which variously called harmonic levels, Fibonacci levels, etc. They can be so important in helping us determine what is likely to happen next. So, umpteen markets that there are out there, plenty that we can trade. So let's now go and look at the actual markets. So bear with me a second. Let's bring up a little for questions shortly, but if anything occurs to you as we work on through here, then don't hesitate. I hope you can see the charts. And what I'm going to start with, I'm actually going to start with the FTSE 100. FTSE 100. Oh, I just picked up a question from earlier. Yeah, I better not mention the names of those two spread betting companies because, you know, there are so many companies out there who have all been jumping on the bandwagon of easy money. Easy money. And I think those days have, well, with any luck, they're starting to come to an end. So, while I'm starting with the UK 100, the FTSE 100, because we've got an interesting set of charts here. I've got some Fibonacci on here, as well as the standard indicators you've just seen. We've had price pop up to a high. It's up to what I call a false break reversal level. It's got several things telling me that we better look out. And just on basic chart analysis, well, what was it? We had this run was the longest uninterrupted run day after day, going to a new high. In how many years was it? Can't remember exactly what it was. Maybe some of you guys actually know this. 17 or so years. After a massive run, eventually we are going to get a correction. We're in that correction right now. And as this decided to break and we get a little gap opening, okay, we have this gap opening on Tuesday, which is telling us that, yeah, you know, something could be going on. Could it now be that the fact that most of the stock markets tend to move in lockstep together? So if we pop over to the Wall Street or the Dow Jones, we can see that this has been plateauing now for some little while. Let's go back to November, the election. First the sell-off, then the euphoric rise. And that euphoric rise just went on. This is the Trump rally. It's the Trump rally. There's that old expression in the markets, buy the rumor, sell the fact. And it is so true that when there's a rumor that the market gets on board and thinks, oh yeah, it's all going to be great now, Trump's in, da-di-da-di-da-da-da. He's going to do this, he's going to do that, etc. And all of this euphoria means that people have to get into the market. They just don't want to be left behind. And then, as we get, you know, a month later or so, then reality starts to kick in. Think, right, now what? Yeah, but what about corporate profits? Yeah, are they looking good? Not really. What about interest rates? Damn it, yeah, they're starting to rise. And how long will it be before what Trump has said about making corporate America great again? How long will it be for that to actually translate through into earnings? Heads start to get scratched, and then the buying stops. And then some of the selling starts. And if you look at the activity index, oh dear, it's now dropped below the 0 line. It's telling us that there is more activity on the sell side than the buy side. This red line is the line in the sand. If this one goes, the chances are we will get something of a major move on back down. If we look at the DAX is not really taking part in any correction at the moment. It still seems to want to keep on going higher. And it's one of the few markets that does seem to want to go on higher. If we look at the Australian is also at a pivotal point. Notice the activity index has popped down below the line. And we've got this neckline. I'm just waiting for this neckline. I want to see what happens here. The chances are that if it breaks through this neckline, what do we got? We got a beautiful little mini head and shoulders, and let's just go back to the first bit of technical analysis that most of us learned, which was you project a head and shoulders from the head to the neckline and then on down. Could it run down to this sort of level? Well, probably no surprise that if we pop a line across, oh, look at that. It's an area where price has found support in the past. So it might just find support again. So, standard bit of basic technical analysis. I'd like to go a little bit further than that, of course, but the stock market at the moment is telling us that the Trump rally seems to have come to an end for the moment. And what of the dollar index? What of the dollar index? Well, here we are. We've got this rally that we've had. We've had this massive move on up. Again, it's the Trump rally. But we've also got a big, big divergence. We've got the activity index not going to new highs when price has been going to new highs. Now, a good many indicators will actually tell us this. But this pattern is an important harmonic pattern. You notice these light blue lines? These are Fibonacci areas where we just might want to find that there's a bit of support. Well, there was on this one. Looks like there's going to be here on this one also. Will it or won't it crash on down? That's the red line. That's the red line. Right, let's go back now and look at one or two other charts. We've had some amazing runs. Yeah, let me show you this one because I just wanted to make this point. This is pound against the CAD. So it's the pound against the currency. It's been a major move. In fact, we did get a run down. Now, as it's the pound against the CAD, I'm sure everyone has been fully aware of what actually went on over the weekend with the talks about a hard Brexit, and on Monday we got a gap opening on all of the pound-related pairs and, of course, the cable chart itself. But the point I want to illustrate here is that that is the day of the crash on down through. I've put a couple of additional indicators on here, and I'll tell you the difference in a minute. Look at this. The one at the bottom is the RSI. It's a standard relative strength indicator, the Wells-Wilder indicator. And because price ended up lower than it was on the previous day, it went to a low. Then just above here we've got the standard MACD, much the same. The histogram, partially obscured by my red line, shows that it is lower. It is lower. But lo and behold, the activity index, I'm just going to move this line just to one side. Look at that. It's turned blue. It started to point up. Now, there's a simple reason for this, because the calculation behind the activity index is a combination of a standard oscillator momentum type indicator, but the kicker is that it also takes into account volume activity. And volume activity is tick activity, which this calculates. So if the tick activity is greater on the upside than the downside, then this will turn blue and tell us that real trading going on is not selling, it is buying. And that's what happened on the day. On Monday, it just gapped lower. It was marked down, heavily marked down. But during the day, there were buyers, a lot of buyers, so much so that we've had a massive rally that has followed through. And that's where the activity index really comes into its own and makes it stand head and shoulders above all other indicators, or all other oscillators. So, we've had some real good runs on many of these markets You know, we get these runs moving on down. We've got a set of rules. We've got a couple of other little tricks that we use, which I say tricks. A couple of other things, very, very straightforward, very, very easy to use. I can't put them on screen because it'll sort of completely give the game away, and those people who are my traders class members who trade using this process, it wouldn't be fair to them. So suffice to say that these additional tools enable us to get the best part, the safe parts of these moves. And you know, pound against the AUD just happens to be one of these with a high ATR, moves an awful lot in a typical day. And as you can see, what are we doing here? We're just picking out the trend. We've got an uptrend. Channel lines are very useful, I have to say. And then, at around about this red line area, it rolls over and moves from an uptrend to a downtrend. And all these indicators do, they just help us identify that, if we can't already identify them. And it helps us to get in at the right moment, and most importantly, get out at the right moment. Now, this one's quite an interesting one. Pound against the Swiss. Over the years, look at these moves. Massive, massive, massive moves. But let's just look at this right now. And whilst the Fibonacci aspects of it does not come specifically with the 20-minute extreme swing trader, it's an add-on, which one can add on or not, as the case may be. Don't necessarily need this automatic Fibonacci indicator because we can do it all manually. But what this is really showing is that, yeah, we've had a good run up, the trend changed, we've had a run down, and it is now, look at that, it's at the Gartley level, or at least it was on Monday. That was the gap down. And this is now suggesting that we could be on for a major rally here in the pound-related cross pairs. Good many more, of course. We've got things like the Euro IUD, which has triggered. And this little blue line is just showing us where we are right now. And I'm actually currently short on this one, just cautiously waiting to see what is going to happen next. Yeah, you know, that there's more than 136 pips actually in profit, but we've got stops down here, which we're just being cautious on. We do not want a profitable trade to turn into a loss. And so if there was a sudden turnaround, we couldn't be hurt. We've got a 136 sort of guaranteed, provided the market doesn't gap above it. But what I really want to illustrate here is we tend to look at previous lows. And at the bottom here, look, we've got today, we've got earlier in December, we got earlier in November, and we got later in October. Prices bounced up from here several times. It could happen again. It could happen again. Let's now go out to the weekly chart. Well, you know, it's not telling us too much more than the fact that overall it's been moving down. And then, if we run out right the way to the monthly, look at this. This is the sort of chart that I like to see with what I call a lot of fresh air underneath it. Not a great deal of price action, apart from, of course, this bit of price action. If it were to get through here, it's got the potential to move down hundreds of pips. And that's the sort of trade we like to get into. So at the moment that we've effectively got this trade, it's a bit of a probing trade. It's in profit. It will produce a profit, whatever happens. But it just might produce an awful lot more profit if it keeps on going down. And every now and again, we get big runners. And those big runners will produce these whacking additional sort of super profits, if you like, will make all the difference to our accounts. Now I've got a lot of charts that I could show you. The New Zealand against the USD. This has been a tremendous mover, a really good mover. It's helped us no end. We've done very, very well out of it indeed. Things like recently we've got the Australian against the CAD. Now, for whatever reason, I'm not actually on this, but I know that several of our members are. And I actually had a message from one of our female members, who is a very active trader, who is in on this one, and she's got this move running really, really nicely indeed, and is up multiple hundred pips. I'm also aware that time is getting on here, and we want to have a little bit of time for questions. So let's just look at that cable, pound against the US dollar. So the pound against the US dollar, we know that it's been volatile. We know that it's had some amazing moves, big down moves, but it has been volatile. You know, we had the flash crash right the way over here in October. We had another little flash crash 3 weeks ago. But by being cautious and not being greedy, our indicators will let us take this sort of move. I mean, this was a move that lasted, 4.5 days, 5 days. And, okay, you know, we could maybe have got a bit more out of it, but we want to do it as safely as possible. And, you know, it's produced a nice number of pips. We get the opposite then happening down here. We get a run on down, a couple of hundred plus pips. And let me just point out again that the low that we had, which is now 4 days ago, and if we just work back on the activity index down here at the bottom, 1, 2, 3, 4, look at that. It was actually showing blue over the last 5 days. So it was showing us that the balance of buyers were coming in before we'd even got the low. And so I can use that sort of indicator to actually help us. There are one or two that indicators out there. There's a thing called the MFI, on balance volume. They do they don't do the same job, but they do a job purely based on volume. This indicator combines not only volume activity, but also what is going on with momentum. Now, let me just throw this one into the mix as well. We've got the US dollar CAD. Its slang term is the loonie, based on the Canadian bird, which features on a Canadian dollar. And the reason I just want to mention this one is that this has given us a good run. This particular move gave just almost a couple of hundred pips. And we got two forms of entry. We've got an aggressive entry, which is taking reversals. And then we've got the softer trend confirmed moves, and that one whizzed on down through here. So we've got a couple of methods of looking at and using these indicators. But what is really quite interesting, I want to just run out to the weekly chart and the monthly chart and just look at this overall pattern in the US dollar against the Canadian. We've had a massive run up. While the oil price, which affects the Canadian economy, while the oil price was collapsing, then that was very bad for the Canadian economy. And consequently, it helped the US dollar climb against it. Now, you know, I don't sort of use fundamentals all the time. I'm mainly using technical analysis, but it's useful to keep an ear and to keep an eye on what is going on out there that could well affect a currency. So we've had a massive run up. We then have a correction followed by a rally. And look at that little trend channel, and that trend channel actually got broken. It got broken this month, but prices then pushed back up into the trend channel. So right now, as I look at this on the weekly chart, standard Elliott wave A, B, C, D, E sideways pattern, or flat as they call them, started to look as if we were going to get a major breakdown, but prices then attempted to come back. Coming down to the daily, well, right now, using our indicators, it has triggered long. Or at least, sorry, it is just about to trigger long, possibly. And the red line is right here, where prices actually perked up to today. So if this red line is breached by price going higher, then the chances are we are going to get this moving right the way back up into the trading range. It might even go to new highs. But equally, it could be ready just to roll over and resume its downward path. So consequently, right now, it's a no trade. It's a no trade. Finally, I'm just going to show the Australian dollar, which is a phenomenal mover. And I'm going to show you some short-term and some longer-term analysis. In the short term here on the daily, then we've got these zones of potential support, and prices managed to bounce off these areas. We can also observe that this downside pattern is the most common part of Elliott wave, where we get this move to the downside, we get that move to the upside, followed by a move to the downside. This is a classic A, B, C pattern. And if you look for those, you can make money out of them. If you can find a first move and then a rally, and then price action starts to move in the same direction as the first big price move, you can get in on these and trade the C move. And they are fantastic movers. Intraday, longer term, short term, all the way through. So what this has actually done for us is that it's given us the heads up that after an ABC move, at an area of support, we could be ready for a rally. And that is exactly what we've seen. So we've seen, show those numbers not moving with it. Then we've had a good run on the downside, two good runs actually on the downside, and then we've had a good run, safe run on the upside. Still running actually, by the way, this one on the upside. So let's then move right the way out to the monthly, and I think we just remove those. And I'm going to put a bit more data in, and we've got an overall pattern. We've got an overall pattern where, you know, this is going back to 2008. We all know what happened then. We then get a massive rally as the US dollar weakens, and then the opposite happens. It comes right the way down, not to where it started from, but it's come down to this Gartley level. And I keep an eye on these Gartley levels because, you know, these are all important levels where we just might be ready to get a big rally. The Australian dollar, very much affected by China. And this tells us that maybe, for the moment, the market is not worried about China. Right. Okay, folks. Well, look, I've spoken a fair bit here. I see that Simon has actually just put an offer up, and I must just mention this offer: 20-minute extreme trade. It's online, and the price of, well, it's £79 at the moment, and that there's an even more attractive deal on it. If you pay half now, just half, and you try it out, and you think, oh no, it's not for me, just send it back. We'll refund your £139.50. But if you think, yeah, I think I can do this, this is going to help me in my trading, then there'll be another couple of payments a month after, well, just over a month after that, and a month after that. So you pay in total just 279 quid. And we will throw in an additional online, my original breakfast trader, for those people who are interested in looking at intraday trading as well. So that's the offer. Folks, I haven't left many minutes for questions, but if you do have any, do not hesitate to fire some questions at me.
George, just one or two questions we can, just for a couple of minutes. Thank you, by the way, for a super presentation. Sorry, before I plunge into the questions.
Sure.
Peter says, on the Euro Australian dollar chart, there were a couple of days when the candles were down, but the indicator bars were blue. Is this where you either get out or get in the opposite direction?
Well, they help us. They give us the heads up that, sorry, was this the chart Euro AUD? Where we've got these two blue candles, and although I am currently short on this from this upper red line, from that 143 sort of 18 region, it's a point of concern. It's not telling me to get in, it's not telling me to get out yet, because price action, if it pops up above, well, where this red line is, I will be taken out automatically. That's where my stop profit currently is. But the mere fact that I've now got 2 days of where the balance of buying and selling has actually been to the upside, buyers, not sellers, despite the fact that price has gone lower, is telling me that just maybe it is not going to keep running down. So that's all it's telling me at the moment. It's a point of concern, but it's not giving me a very definite signal yet. Certainly not a definite signal to get me out of the trade. Price action always confirms. I hope that helps.
Okay, thank you. On the pound CAD, pound Canadian dollar, Richard says the red line, which is waiting for the pound Canadian dollar to exceed, for the pair to be considered a long, what is it? How was it arrived at? So
all right, okay. Now, if we go down to the low, yeah, if I just go down to the low, then during that day, and the fact that the activity index is telling me that there were more buyers than sellers during the day, then that gives us a very strong heads up. Now, candle watchers will also recognize where we've got a day when it does a gap opening, and the little candle is all by itself, the day's activity is all by itself. That so often leads to a reversal, okay? And we then saw it move on up. Will I be buying this? Not yet, not yet, not yet. There was certainly, as a result of Monday's price action, there was some intraday fun to be had with all of the pound crosses, and I know a number of us did trade them. But as for a longer term trade, not yet. We're just standing aside.
Okay, Richard's asking, he says, not that line, the horizontal line. The red line.
Oh, right.
Mm-hmm.
Yeah. In the indicator itself, the horizontal line in the indicator. Yeah, that's starting to tell us that there's a pretty damn good possibility that this will now break into an uptrend. but we want just a little bit more information because what so often happens, what will very, very often happen, is that we'll get, following a good rally up, and it has been a massive rally, we could get a number of days that then decide to come down. And what we like to see are several of these, ideally, coming down. Sorry, that one didn't work quite so well. Coming down and then moving on up. And it's what we call a higher low, and we often look for those. So at the moment, it would be a little bit too speculative to wade into this and say, right, yeah, we're going to buy, because where are we going to put our stop? Far too many 100 pips away from where price currently is. We only want to put a trade on if it's going to be low risk.
Okay, I think Richard, you'll need to contact George separately. We can't go into too much more detail on this chart, I'm afraid. I know it's not quite the indicator you're asking about. Cole asks George, does your system alert you to when a trend is forming so that you can capture the move even if you don't happen to be looking at that particular chart?
We do have the ability to put alerts on these, and we tend to, most people will just work on a relatively small universe of stocks and indices and can just eyeball them. Yes, you can put alerts on them. You can end up with too many alerts if you're not careful, but it can be done.
Okay, fantastic. Let's have a look. Trevor, why did IG suffer a 40%? Oh, Trevor, no, that was all the news in December on the new ruling by the FCA that came out trying to prevent small account holders having very highly leveraged spread betting accounts. So if you Google any of that FCA news in December, IG, it had a big impact because it meant a lot of their small account holders were not realistically going to be able, they weren't really realistically going to be able to service these small accounts. Does the alarm come with the package, asks Paul, and do you always use daily candles, asks Charles, and I think we'll have to stop the questions there because it's
the short answer is yes. The short answer is yes. There is a longer answer, but if anyone wants to get in touch with me, just wallop an email to me. I've just popped it in the little chat box, george@clickevents.co.uk. If any clarification you want on any parts of this, or you want to just set up a dialogue with me, about trading in general, be only too pleased to swap emails with you.
Fantastic. Well, George, thank you again for joining us. We're right out of time. We'll need to go on to our next speaker, but it's been super to have you on board again. Thank you for joining us and taking us the time to take us through the system. And again, we'll follow the links up in following emails. This has been recorded as well, so you can go back and watch this tomorrow if you like. So, George, I'll take the presenter role back and say on behalf of us all, thank you very much indeed.
Yep. Bye now.